What is happening, traders? Thank you for tuning in. It is Saturday, March 6th. It's a little after 11 p.m. here on the West Coast in Los Angeles, California. And today we're going to be looking through the Form 6K for Autohome Inc. They are a used car platform in China. And if you know anything about what I like to do, I scour through SEC filings. I look up a lot of companies and I look for relative information to companies that I am involved in. And I found interesting information regarding Uxin. Before we get into that, guys, if you're new around here, hit the subscribe button below. We're trying to get to 500 in the first 3 months. Again, I'm doing my homework. I'm bringing all of the news I can find, guys. The first information I want to bring to light is it says the overview of automotive industry in China. And it says the total used passenger vehicle sales volume in China has increased from 6 million units in 2015 to 11.1 million units in 2019, representing a compound annual growth rate of 16.5%. The total used passenger vehicle sales volume in the United States, however, was 40.8 million units in 2019, indicating that there's a large room for growth in the Chinese market. And it is expected that the total U.S. passenger vehicle sales volume in China shall increase to 10.8 million units in 2020 to 19.5 billion units in 2025, representing a 12.6% compound annual growth rate. It also speaks a little bit about the automotive industry in 2020 with the pandemic, and it says despite total passenger vehicle sales volume, including both new and used cars in China, decreased by 42.6% year-on-year in the first quarter of 2020 due to the negative impact of COVID-19. The sales volume increased by 1.6% year-on-year in the second quarter of 2020 and 8.5% year-on-year in the third quarter of 2020 due to a well-contained pandemic in China and supportive government policies. Now, supportive government policies is something to keep an eye on because remember, there were reports coming out that China is changing some of its policies, loosening some of its grips, allowing more license plates to be registered. And so it is something to monitor. Coming from an automotive player in China, these are good signs. And it says, according to the iResearch report, the main factors driving the growth of China's automotive industry includes the following. Low vehicle ownership penetration rate. I've been saying that for a while now, guys. Automobile ownership was 186 units per 1,000 people in China at the end of 2019. So that is less than 20%. While in the United States, it's 837 every 1,000. That's 83%. Let's just go with smaller countries. 591 in Japan, so that's 59%. 458 in Germany, that's 45%. 433 in South Korea, 43%. And even Malaysia has 250, and that's 25%. So, I mean, there is room to grow. There's a lot of room to grow. It also says urbanization and increasing affluence for another factor, and that the urban population as a percentage of China's total population increased from 55.5% in 2015 to 60.3% in 2019. Leading to an increase in travel distance for urban dwellers, cheaper modes of transportation. Now, the Chinese government has been investing extensively in transportation infrastructure, with China's total mileage of highways growing from 123.5 thousand kilometers in 2015 to 149.6 thousand kilometers in 2019. As a result, automobiles, which bring higher mobility to consumers, have become more increasingly important form of transportation in China. That is beautiful. That is all I want to hear, guys. I can almost stop right here, but I'm going to keep going. It goes on to say favorable government initiatives has witnessed a preferential policy environment for auto transactions in recent years. For example, the centralized government and local governments in cities with restricted vehicles purchases, such as Beijing and Shenzhen, are gradually encouraging the appropriate increase in number of vehicle license plates and purchase targets to drive the consumption of vehicles and related products. The Chinese government is trying to get cars to their citizens. They want their market to continue to grow. It has been on fire for the last 15-20 years. They don't want it to stop now. It also says consumers are spending more and more time online, and online channels are now serving as the most important source of information for consumers. The pandemic has accelerated the change in consumers' behavior, with the frequency and duration of usage of online auto service platforms increasing significantly post the pandemic, and accordingly force various industry players to adapt their offering to an ever more online ecosystem. Now, if they're not talking about Uxin, I don't know who they're talking about, because Uxin completely changed their business. So that is something. It goes on to highlight the improvement of information, transparency, and integrity on used car transactions. That's exactly what Uxin did. It improved all of those. And it also says users' strong willingness to leverage online auto service platforms to purchase used cars. According to investigation by iResearch, users are generally more prone to purchasing used cars on online auto platforms than in offline stores after viewing information on the online platform. Considering the strong user willingness of online view and online purchase, and the trust of C2B2C model provided and backed by online platforms, there exists huge potential for online used car transactions. Again, support of government policies on used car transactions. We've been saying that, guys. I just want to end this video with the competitive landscape that they talk about. They highlight Uxin, Yoshin, Guazi, and so they talk about Dodge Chetty, which is a auto news that Uxin had partnered with a while back to exclusively release their news information. So that's interesting to see that they're on here. And it just highlights Guazi and Yoshin as players in the used car space. So guys, if you guys got in on that dip under $1, good for you. Really good. Seriously, that's a steal. But look out for earnings, guys. This is going to be a really good stock. Used cars are going to be on the trend. Even if earnings doesn't turn out, I don't see us going much lower than what we hit the other day. 95 cents was a steal. I don't know if we hit below $1 again, but if we do, buy. If we don't, still buy, because in 5-10 years, this stock has great potential. Thank you for tuning in to Let's Talk Trades, guys. See you next time.